The pre-opening rates have settled absolutely flat, very quiet, but just perhaps, buying time or marking time around these levels after what has been a phenomenal run. One space that has done exceptionally well is autos. Basudeb Banerjee, analyst at ICICI Securities, joins us now to talk about that. Basu, thanks a lot for joining in. Most auto stocks are at 52-week highs. Is it because of better demand coming through, the supply side issues getting resolved, a mix of both? And what are the stocks that you'd be looking at now to buy despite the rally?
Yeah, so Sonia, as you rightly said, that after 3 years of underperformance, finally the sector has been doing well in this calendar year. And the reasons behind them are like the steadiness in retail demand. I am not saying that retail demand is surging away, but it is quite steady in the seasonally weak months of June, July, and this monsoon month of August. If you look at segment-wise, retail demand more or less is steady for last 4-5 months. Now, that has been coinciding with the factor that steel, aluminium, copper, palladium, all key commodities have fallen like 20% plus from their April highs. So last one whole year, capital cost of vehicles have moved up by 10 to 15%. That's quite a steep jump post BS6-led price hikes. So that has been pinching pockets of consumers, other than fuel prices moving up by almost 30% in last 2 years. So combination of those things taking up the total cost of ownership of a vehicle. So now at least the visibility is there with metal prices softening. No more such steep price hikes going to happen in the near future. And that's what improving consumer confidence. And from an earnings perspective, if I look at retail demand being steady, inventory levels being low, and your raw material prices coming down, that's fabulous for earnings upgrades down the line, and that's why the sector has been doing well. And to add on to that, as you rightly mentioned, crude oil prices also now moving back towards $90 a barrel level.
Basudeb, got it.
If it falls further, nothing better.
Yeah, got it. Basudeb, good morning. So you've got that, the macro triggers. Now, let's talk about stocks, because the one that's led it clearly is Mahindra and Mahindra. It's been a very strong sort of move on the stock, and we've all seen the response to their new products. But at current price, has it run too far ahead of the earnings? What's your view?
Yeah, see, I'll say that after losing market share in UV space since 2014, from 45% all the way to 15 odd percentage, it's a remarkable show finally from Mahindra's through launch of excellent models like Thar, Refresh, XUV 700, and now the latest Scorpio N. And the next thing is for investor community to see that how they deliver in terms of auto segment profitability, which still is, I believe, on the weaker side. So volume outlook for SUVs having improved, a bunch of new good models which are going to, now the latest one is going to come in the showrooms from next month for retailing. So demand-wise outlook pretty robust. It's all about profitability improvement for next leg of upgrades. So if you ask the kind of profitability they have been delivering and the kind of steadiness in their tractor segments, the EV deal getting announced, the future EV launches getting shown a couple of days back. So all the major figures are already there in the price. So for incremental upgrades, the main catalyst can be profitability improvement in the auto segment.
Okay, there's a big rally that we're seeing in some of these two-wheeler guys as well, right? Eicher Motors, TVS Motors hitting fresh highs too. Between these names, what would your top picks be and what would the triggers be now?
See, our top pick in the OEM segment has been Tata Motors, and we are still very much positive on Tata Motors because all the tailwinds of the business are now coming together, where suboptimal inventory for JLR, Range Rover Sport Refresh getting wholesale now, raw material prices coming down, currency in your favor, China lockdowns getting resolved gradually, and in India anyways Tata Motors is doing excellently well. So if I combine all those things, free cash flow generation outlook only improves, and already company is looking towards 1 lakh EVs in FY24 from present run rate of 3,000 to 4,000 units a month. So I'm pretty much confident on Tata Motors as the uh, best positioned company in terms of upside potential in the auto OEMs. Uh, yeah.
Sure. Okay, that's on the auto OEMs. We spoke about the two-wheeler guys. You said Tata Motors is your top pick. In the commercial vehicle space, you also like Ashok Leyland. What is the upside that you see in terms of earnings? Because there is this expectation of a huge infrastructure pickup, but we haven't really seen that flow through yet. What's your view here?
So Leyland definitely is a proper derivative of the CV cycle. And if I look at today's market size is FY22 is still half of the peak of FY19. And if I look at the weekly retails of MHCV sales, it has been quite strong in these seasonally weak months, and almost 6,000 retails a week, which means 3 lakh units in FY23 against 2,20,000, which means the industry is implying 40% plus growth in fiscal 23. And it's an operating leverage dependent play, and steel price correction is only going to add on to the overall earnings outlook. So Leyland definitely is one of our topics. We have a price target of 182, where any value unlocking of switch mobility, the EV arm will only add on to the potential valuation.
All right, Basudeb, we'll leave it there today. Thanks a lot for joining us.